Hey everyone, CDSL has recently published its Q4 result and its revenue is down by 7% and net profits are down by 22%. Now I've been covering CDSL for a long time and I always say that CDSL is a great proxy for growth in Indian stock market because it is the largest depository in India. And this market is a duopoly where we have only two players, CDSL and NSDL. Today CDSL has more than 15 crore demat account versus NSDL that has around 4 crore demat account. Clearly CDSL hold a significant lead in terms of number of demat account, primarily driven by strong presence in retail investor segment and partnership with digital first brokers like Zerodha, Grow, Angel One that together command a massive portion of Indian brokerage industry. Basically, as the Indian stock market would grow, CDSL would be a direct beneficiary of this trend. However, the catch is CDSL business is directly linked to stock market performance. If Indian stock market does well, CDSL benefit from it. And if market underperform, CDSL loses business. That is exactly what has happened over the last many years and the same story in latest result of Q4 of FY25. But the big question is, what is the expectation from CDSL in FY26? Will it rebound or there is more pain ahead? To get a clear picture on this, you need to know how exactly CDSL makes money and what is the role of stock market movement in CDSL business. That's what we will discuss in this video. It will help you get a clear idea of what can be the expectation from FY26 and whether you should buy, hold or sell CDSL shares. Alright, let's get started. Okay, let's first understand how CDSL makes money. Okay, this slide gives a clear picture of CDSL revenue breakup. In Q4 FY25, company did revenue of around 256 crore. Out of this, 87 crore came from annual issuer charge, 49 crore from transaction fee, 25 crore from IPO or corporate action income, 37 crore from online data charges, and 58 crore from other income. Now let us simplify these revenue streams. So first is annual issuer charge. It is basically the fixed annual fee CDSL charges from listed companies for maintaining their securities in demat form. Please note that it is a stable and recurring income source for the company. It contributed around 34% in company's Q4 revenue. Then second revenue stream is transaction fee. This is the fee charged to depository participants, including brokers, for every sale transaction made by investor. This income stream is completely linked to the market. It means CDSL earns more when market volumes go up, especially in equity delivery transaction. And when volume dries up, this income falls. It contributed around 19% in Q4 FY25 income. Then third stream is IPO and corporate action income. So CDSL earn fee when new demat accounts are opened during IPOs or when shares are credited to investors' account during allotments. Also CDSL charges for handling action like bonus issue, splits and dividend. Again, IPO income is completely linked to the market. Since Q4 was weak, IPOs have dried up. It contributed around 10% in company's Q4 income. Then fourth stream is online data charges that include fees for reports, analytics and system access that CDSL shares with intermediaries. It contributed around 14% in revenue. And fifth stream is other income that includes services like eKYC, investor verification for brokers, AMCs, then e-statement, training fees, software update and so on. It contributed around 22% in company's Q4 revenue. Now the catch is, except for annual issuer charge that has very low dependency on market, all other revenue streams have medium to high dependency on stock market. And this is clearly visible in quarterly performance. For instance, last year same quarter, issuer charges were 67 crore and that has actually got increased because it is not linked to the market. However, transaction charges fell down from 76 crore to 49 crore. That's a massive fall. IPO and corporate action charges were similar. Online data charges also fell down significantly from 52 crore to 37 crore and other charges have increased. If you observe, transaction charges have increased and peaked out in Q2 of FY25. This was the peak of bull run in India last year. Then look at IPO income. It also peaked out in Q2 of FY25. Online data charges also peaked out in Q2 FY25 and so is other income. And these income streams have fallen significantly in last 2 quarters. So in coming Q1, Q2 quarters of FY26, year-on-year comparison might look weak because FY25's early quarters captured peak market activity. Another challenge is valuation. CDSL peaked out near levels of around 2000. At those levels, it touched a peak of 77, which was way above its historical median of around 40. After the correction, its PE has now touched levels around 50, which is still higher than the median valuation. And if CDSL upcoming earning degrow versus year on year, its EPS will decrease and PE will increase. In other words, even after an excellent correction, CDSL valuations are not comfortable. Now if you look at CDSL historical share price movement, it has been very volatile. Its share price kept on falling after its IPO in 2017 from 200 rupee to nearly 100 rupee. It was also the phase when mid-cap and small-cap index fell down around 50%. And then we witnessed massive bull rally in Indian stock market. As a result, CDSL share price zoomed nearly 8 times from the lows. However, again, Indian stock market witnessed correction between Jan 22 till March 23 and CDSL share price also corrected around 40%. Then we witnessed another sharp rally, especially in mid and small cap index, and CDSL share price also zoomed 4 to 5 times. But when stock market fell down again recently, CDSL share price has tanked around 40%. By the way, the share price movement was also linked to CDSL earning growth, which was subdued between 2017 till 20 period and then exploded during COVID rally, again fell down between 22 to 23 period, but recovered sharply after that. However, now again there are challenges with earning growth due to slowdown in stock market activities. Now as far as valuations are concerned, CDSL PE touched a low of below 20 during COVID. Those were amazing valuation, and then expanded to highs of around 75 PE. Then it fell down to lows of around 32 and then again zoomed to PE of 76. In recent correction, PE touched levels of around 40 and currently it is trading at a PE of around 50 and the median valuation is around 40. So considering all these factors, it looks like the pain for CDSL is not yet over. Earnings can remain subdued in coming quarter versus year on year and valuations are still not cheap. Interestingly, if you look at CDSL shareholding pattern, both FIs and DIs have reduced their holding. FI holding is significantly down from 17% to 11.3% and DI holding consistently down from 24% in June 24 quarter to now at 15.4%. And the weak hands of public have increased the stake from 46% to 58%. It clearly suggests that institutional investors also find CDSL not very attractive considering the challenges in Indian stock market and the premium valuation it commands. Having said this, I always say that CDSL can be a great wealth creator in the long run. If you ignore all the noise, since its IPO at around 130 levels, CDSL is still a 10-bagger stock in less than 10 years. The only challenge is that CDSL performance is directly linked to stock market activity and hence it will remain volatile. In fact, the correction phase actually creates a great opportunity for accumulation. It's just that at the moment I find the valuation on higher side and earnings might remain subdued. So we should get a better entry point in CDSL to load it up for the long term. Personally, I am invested in the company, not selling my shares but also not accumulating it at the moment. I am tracking this company very closely and once I find the valuation attractive, I'll consider adding it. I think a PE of around 35 should be fair for CDSL. Let's see if I can get those levels or not. By the way, if you are a stock investor, it's extremely important to track quarterly performance. We are already in Q4 result season and I'm tracking more than 200 results and record them in an Excel sheet along with my comments. It really helps in identifying investment opportunities. This is part of my weekly video series where I share one exclusive video every week, but only for long-term investor. In this series, I discuss quarterly results and also share my own investment strategies, stocks I am buying and selling from my portfolio. For more details, you can explore my website or join button of my YouTube channel. Now, if you are looking to invest in CDSL, you have two options. First, you closely track the company and wait for better entry levels. Or if you don't have enough time for research and you are a long-term investor and you have got a longer horizon, you can opt for SIP based approach where you buy fixed shares of CDSL in a regular interval rather than waiting for the right level. Choice is yours. But one thing is for sure, in the long run, CDSL should continue to grow. Yes, the journey won't be easy. It will be quite volatile. But those who will keep patience and conviction should get rewarded in the long run. Let me not stretch this video further. If you find it useful, do share it within your circle. I'll see you next video. Till then, take care.